IPO season has not yet ended. So, welcome back to Moneyverse everyone. In this video, we'll be talking about the IPO details of Devyani International Limited. Yes, one of the most awaited IPO. First, we'll be talking about the basic details of the company, then some details regarding the overall overview of the industry, then their business details and their strengths and risks, and also finally we'll be talking about the IPO details, and also towards the last of this video we'll be telling you if we are personally investing this particular IPO or not. So let's jump right into the screen and see what is Devyani International Limited about. So Devyani International Limited has been incorporated in 1991 and is the largest franchisee of Yum Brands in India. So Yum Brands are among the largest quick service restaurants QSR chain operators in India with 655 stores across 155 cities all over the country as of March 31st, 2021. So it operates three verticals. That is, one is their core brands, second is their international business, and third is their other businesses such as the Illy Bar, Amreli and Krish Juice Bar. So we'll come to that in the next section. So initially the business started with one Pizza Hut store in Jaipur, but subsequently it expanded its operations in both KFC and Pizza Hut as of March 31, 2021, and it operates 264 KFC stores, 297 pizza stores and 44 Costa Coffee stores in India. Now let's look into the overall growth of the industry or the overall performance of the food F&B industry. Yes. Looking into the overall sector, we can see that the Indian food service profit sector generated a total revenue of 8,366.6 billion in 2020, growing at a CAGR compound annual growth rate of 1.9% from 7,601.4 billion. So this has been highlighted here. So growth was mainly driven by the rise in the number of transactions, which grew at a CAGR of 2.4% during the same period, and increased deliveries, higher demand for eating out, urbanization and increased exposure to different food types have played a significant role in the growth of transactions, especially in 2020 due to COVID-19. The number of transactions is expected to grow at an even higher rate of 6.9% in the period between 2020 and 2025. Initially, we were talking about the growth between the period 2015 to 2020, and going forward, we'll be talking about the growth in 2020 to 2025. So, here we can see that while both dine-in and takeaway delivery transactions are expected to grow during this period, deliveries are projected to grow at a higher rate compared to dine-ins because of the pandemic or any of such situations. For instance, in the ice cream parlor channel, takeaway is projected to grow by a robust CAGR of 40.6% compared to 6.9% for dine-ins from 2020 to 2025. So you can pause the video. So wherever I have highlighted, you can pause the video and read through that. Okay, so looking into the overall sector, this is the divisions. So looking into that, we can see that quick service restaurants have given a 34.1% sales shares, while pub, club and bar has given 27.1% sales share, and FSR, full service restaurants, has given 15.5%. These are the three segments which gives maximum returns in the food service sector. So in 2020, we can see that in 2020 the QSR channel made the largest contribution to the food service industry with a sales share of 34.1%, and this was followed by pub and club and bar, full service restaurants with market share of 27.1 and 15.5% respectively. Yeah, this is what we have talked about. Here you can see the growth in the past 5 years, and also on the right side you can see that this is the forecast of the CAGR in 2020 to 2025. So all channels are expected to grow at robust rates in coming years owing to the post-pandemic economic rebound. So in 2015 to 2020, we can see that the quick service restaurants was giving 5.5%. It is all about the sales history and future growth. So this is all about the sales before. So right now, looking into the 2025, we can see that the QSR is going to go up to 12.4% and pub and bar to 18%, full service restaurant to 16%, which is actually a very good figure that we can look into. Because all these years, looking into the financials of Devyani, that we'll come towards the later part of this video. Looking into the financials of Devyani, we can say that it was a loss-making company in the past 3 years, but in the future, we can clearly see that there will be some hopes for this company to go to break even in the coming years. The quick service restaurant channel grew the highest among all food service channels especially in 2020. So you can pause and go through the figures as well. this is the breakdown of the pandemic period, how the sector is performing or how it is going to perform in the pandemic period, and it has been chronologically designed. So first, it is the initial impact, the first wave of COVID, the subsequent impact, the second one, and also the outlook for 2021. So initially, so we'll just consider the QSR. If you want to read through other segments, you can pause and read it. And now we'll concentrate only on QSR because Devyani is all about QSR. So here we can see that in the initial impact, the initial lockdown restrictions on outlets and spread of COVID-19 among delivery personnel hampered QSR revenues significantly during the first half. Because on the first half, the restaurants and almost all the takeaways were closed for a very long time, and that's why there has been a huge impact in the sales. So looking at the subsequent impact, we can see that relatively higher dependence on takeaway transactions compared to the other channels helped QSRs recover during H2. Contactless dine-ins introduced by key players also were instrumental. So towards the second part, we can see that the severity of this, the severity in the decline has gone down, while in the outlook of 2021, we can see that quick service restaurants will see a better recovery compared to other channels owing to their better sustainability for takeaways, investments of operations in expansion and technology will also drive the growth. So in 2021, the growth is absolutely green here. We can see that the option in darkest green shows that the significant positive impact. So comparing to the initial and the second wave of COVID, we can see that the outlook in 2021 is actually very much great. So the main QSR, the key players in QSR segment is Domino's Pizza, Yum Brands, McDonald's Corporation, Doctors Associates, Restaurant Brands International are the key players in the Indian QSR industry. So now we'll go to the business of Devyani International Limited. So looking at the overview, we can see that they are the largest franchisee of Yum Brands in India and are among the largest operators of chain quick service restaurants in India, which operate 655 stores across 155 cities in India as of March 31, 2021 and 696 stores across 166 cities in India as of June 30th, 2021, which is the recent data. So their business is broadly classified into three verticals that include stores of KFC, Pizza Hut, Costa Coffee operated in India. Then KFC, Pizza Hut and Costa Coffee referred to as core brands, and such business in India referred to as core brands business. So store operated outside India, primarily comprising KFC and Pizza Hut stores operated in Nepal and Nigeria, are their international business, and certain other operations in the F&B industry, including stores of our own brands such as Vango and Street Food, are the other business. So revenue from their core brands together with international business represented 83.01%, 82.94% and 94.1% of our revenue from operations in fiscal 2019, 2020 and 2021 respectively. So looking at a multi-dimensional comprehensive QSR plan, we can see that the sales value of QSR channel is forecast to grow at a CAGR of 12.4% between 2020 and 2025, and the economic recovery and greater investment from restaurant fast food chains are expected to drive growth. The parameters in which Devyani are focusing include quality and safety, customer experience, digital adoption, delivery, and our people and culture. You can widely read about this in this RHP. So this is the red herring prospectus which has been filed to SEBI and other government channels. Now let's look into the strengths and risks of this company. Looking into the strengths, we can see that the product portfolio of well-recognized QSR brands, that is KFC, Pizza Hut and Costa Coffee, the largest franchisee of Yum Brands in India. So the cross brand synergies provide operating leverage benefits, the disciplined financial approach with a strong focus on cash flow management, strong store network with 264 KFC stores, 297 Pizza Hut stores and 44 Costa Coffee. Looking into the negatives of this company, we can see that there has been so many general negatives, but we'll only specifically look into things that is going to specifically affect this particular sector. So dependency on arrangements with Yum Incorporated for its KFC and Pizza Hut stores and on Costa for its Costa Coffee stores, inability to maintain and renew these agreements can have a negative impact on the business, results of operations and financial condition. Dependency on the global success and reputation of its core brands, because if any of their core brands are undergoing through any of these allegations in any of the countries, that might in turn impact the business in India as well. Inadequate and late supply of quality ingredients, packaging materials and other necessary supplies can impact the business, and it incurred losses in the last 3 financial years. Yes, these are the important strengths and risks of this company. Looking into the revenue, we can see that in March 2019 had a revenue of around 1,324 crore, and in March 2020 it has gone up to 1,534, and in March 2021 it has come down to 1,199. So looking into the profits, we can see that in March 2019 Devyani International made a loss of about 97.29 crores. In March 2020 it has made a loss of about 107 crores, but in March 2021 it has made a loss of 57.77 crores. So yes, now we have talked about the basic details, the important strengths and risks, and we have talked about the financial as well. Now let's look into the IPO details. Looking into the IPO details, we can see that the IPO opening date is on 4th August 2021. The IPO closing date is on 6th August 2021. The face value was 1 rupees per equity share, and the IPO price is between 86 rupees and 90 rupees, wherein if you apply for 90, there are higher chances for you to get the IPO. So the market lot includes 165 shares, and they are aggregating 1,838 crores from this IPO issue. So the fresh issue is 440 crores, while the OFS or offer for sale is for 1,398 crores. The maximum number of lots per applications is 13, which will give a cut-off amount of 1,93,050 rupees. So the IPO listing date is on August 16, 2021. Now, looking into the pre-issue holding, we can see that 75.79% was a pre-issue holding, and post-issue holding will be 67.99%, which is actually decent. So now we'll tell you if we are personally investing in this particular IPO or not. So looking into the previous IPO of Burger King, looking into the previous IPO of Zomato, we can see a very much significant growth in that particular company. So, and likewise, even though Zomato, they had a very huge loss, and also Devyani, they are also having a limited loss. But looking at the forecast between 2020 and 2025, we can expect a further growth in Devyani International Limited. So we are personally investing in Devyani IPO is what we have to say. So I think we have covered almost all the dimensions of the IPO of Devyani International Limited, and thanks for watching. If you haven't subscribed to the channel, please make sure to subscribe to the channel and press the bell icon. We will be coming up with so many amazing stock market and crypto content, and also we'll be coming up with the IPOs as well. So thanks for watching again. Bye.